It's Wednesday the 11th of October. Hope you all had a good evening. And just getting you up to speed then with some of the major news that we've had from overnight then to set us up for the trading day ahead. And obviously a lot of the attention yesterday in what otherwise was a fairly quiet session was awaiting the decision that came out of Spain. So, I mean, even if you were looking at some of the market movements this morning, if you have just come in, then you can probably hazard a guess to what occurred, because the euro-dollar pair is trading fractionally higher. If you were looking domestically, if I transition my screens, this is what the Spanish banks are looking like this morning. This big spike to the upside that you can see here on this chart. So this is CaixaBank and Sabadell, two of the larger banks in particular that we were monitoring into this event. You can see prevailing weakness with some uncertainty about what was going to happen last night. And then the Spanish IBEX also is outperforming in the equity market in Spain. So overall then, as you can tell, there has been some developments, and really this goes down to the Catalan leader last night stepped back from making a full declaration of the region's independence, as he called for more dialogue with Spain to peacefully resolve the situation. So he basically said he would act on what he called a popular mandate to declare independence following that referendum at the beginning of the month, but first wanted dialogue with Madrid and the wider international community. So it's kind of saying, I respect the independence vote, the result of which we had. However, we're not going to pull the trigger quite yet and push it through because we want to have some dialogue with the government first. So it was kind of pretty good job actually from the Catalan leader, I guess, in terms of appeasing both sides, not shying away from the fact that declaring the region's independence, but also saying, well, we'll look to see whether we can do this diplomatically first, talking to Madrid and PM Rajoy. So that's the current state of play. So kind of like what we were suggesting yesterday, we were anticipating potentially a bit of a moderate relief rally, and that's pretty much what you've got this morning. I'm just checking out, see if some of my charts have updated here to see where the IBEX is performing, but I was just looking at the euro currency this morning. So if you're looking at both major pairs, you can see cable is basically flat, but euro dollar is up about 20 pips or so. We're up around the high range of what we were trading yesterday. So as you can see, yesterday's top was kind of around here, which was also some of the levels tested early part of Asia Pac trade. We've had a look at that briefly as Europe came in. This is obviously the response of UK and European participants to the development from last night. And we sit just around that level at the moment, so I'll still be watching this fairly closely. On the upside though, there are some interesting levels in the euro. I was just marking up this kind of this band of price action here that dates back really to the summer, and I point this out because of a few key reasons. So this was the 29th of September high. If I just add a few circles here to identify it, so this is where we're trading at the moment. So we're coming up to the late September high, which was 118.81.5 in the futures. We're trading about 12 pips away from that at the moment. But if we start looking further back, you can see here, this is kind of mid-September, then you've got late August. So there's quite an interesting kind of price band here between that September high at 1882, let's call it, and the 119 psychological handle. So basically here, or just below there. So I'm very interested to see how the price reacts here, because if you start thinking about it from a slightly medium time frame point of view, so moving away from being intraday, then certainly you've got the Fed looking to hike interest rates in December. So you're talking about a eventual tightening now of policy going forward. They've already indicated that in terms of tightening of the balance sheet, and the debt hike is priced in at this point. In the contrast though, I've been seeing articles like this, which came out overnight, I should say earlier this morning. It's been updated. This is an ECB source report from Bloomberg, and although it's not particularly groundbreaking, it kind of definitely fits with my fundamental view over the medium term, which is the European Central Bank policymakers are poised to preserve their commitment to ultra-low interest rates, even as they wrangle over how long to keep their bond buying program. Because at the moment, in terms of the ECB, it's all about the speed of which they're then going to taper their QE purchases as we go through into the beginning of 2018. We've had this new kind of idea put forward, which is, although we might see a more larger drop in the number of purchases, i.e. let's say 60 billion currently to 30, actually though it's going to be extended over a longer period of time. So in essence, it's actually still a very accommodative policy stance, and in summary a very slow normalization process, or an unwinding of this large scale QE program. The point being, with this source report, what they're suggesting is that the current outlook has no rate hike until well past the end of QE. So basically there was probably about 4 or 5 months ago a bit of a question mark with the ECB about the sequencing of events, i.e. the Fed basically have started raising rates. Now they're starting to tighten the balance sheet. This was obviously after they finished then delivering their QE. And so they kind of set the precedents, and there was a bit of debate about whether or not the ECB could move, let's say, the negative deposit rate before then pulling back on QE, but that's looking less and less likely the case. Point being then is that I think the ECB are going to be incredibly slow in terms of their return to normality, if you like, i.e. winding down QE, and then we're talking way into the future when eventually we start to see rate hikes in Europe. That being said then, this should, if you start to then layer in potential political risks like Spain, this issue, although I think it will be solved diplomatically in this instance, certainly the push for independence has been a repetitive theme in terms of Spain. I'm sure it will come back. You've also got some changes going through in terms of electoral law in Italy. You've got a vote of legislation in Austria coming up, which might see the centrist right candidate team up with the far right in order to get better support. So there's some almost renewed political risks here. What I'm saying then is that fundamentally you've got what I foresee is a tightening of policy in the US going forward. I don't see any reason, at least right now, for the Fed to change this plan that they have. So rate hike in December, 3 more going in 2018, and then if Trump can start to deliver on things like corporate tax, then certainly we should see the dollar strengthen, and this being in a backdrop of fundamentally a weaker euro for those aforementioned reasons. So with that being said then, this is what makes this short from around this price band that we're looking at here in the euro dollar possibly quite interesting, from this kind of 118.80 to 119 handle going forward. Will this act as a point then for another concerted move lower? It's when you start to look at the euro dollar pair on a slightly longer dated time frame. Obviously we got up to that 121 almost test, and then since then we've pulled back. We saw an eventual low. This is a daily continuation at 117.12. That you can see was an extremely big level, and will be going forward to the downside, because not only was it this point here which we bounced off most recently, and also here, but going all the way back to really the summer of 2015, and also close to around these levels again the second quarter of 2016 as well. If that was to give way, then certainly then this kind of directional move on the pullback with the fundamentals would make some sense to come down. So maybe just a bit more longer time frame, but certainly something which we're thinking about at this present point in time in the context of the policies ongoing. Looking at cable, not a great deal of movement this morning. We're basically flat. The dollar index is down just marginally. Looking at near-term levels, 132.11, so basically pivot could be quite interesting here. It's provided a modicum of support thus far. There was also the high that was seen back on the 9th. If we start looking a little bit longer dated, you can see the relevance of the pivot level, it being, as we just said here, that 9th high. This is when we saw as well, this was the initiation of the hawkish Bank of England when we had the rate decision. The accompanying minutes were particularly hawkish in reference to inflation and an inflator move, and then we've eventually just been on this downward trend lower. It has bounced since, but I think it's quite important that if cable is going to be supported here going forward, it really does need to keep its head above around this 132 handle. Any break below here, so you can see the kind of technical relevance of that level, then I think it could open up an eventual push down to 131 and beyond to eventual target of a retest to 130.48. Again, it's looking slightly beyond the intraday here. That because Theresa May seemingly, we were discussing this a lot yesterday, is kind of almost like she's trying to get her own domestic house in order, has reinitiated this kind of Brexit call to get those kind of Brexiteers in the Conservative Party back online supporting her. However, she was in a radio interview yesterday and she was questioned 3 times directly. If there was another EU referendum, what would you vote for? And she basically refused to answer that question. So it's kind of been brought back into the spotlight. All of this meaning, net-net, the more important conversation here, the more disruption and division there is to deal with politically, internally in the UK, the less time there's spent actively negotiating Brexit with Europe. And again, time is of the essence here, because obviously Article 50 is the definitive period, and we're going into the 5th round of talks, and the likelihood is, I would suggest, that going off what the EU was saying yesterday, we're going to be exactly where we were at the end of round 4 of talks, which is absolutely nowhere. I'd expect this to probably continue to go on through the next few months. I would say if we then get to the end of December or into January and we are still at loggerheads at a point of no progression of where we are at the moment, I think then the weight of this political uncertainty starts to become more acute, and it starts to become more of a factor weighing on the sterling currency. And then, like with the euro, with these two pairs, I mean, if these situations do play out, and again it's in the context of a firming up US economy and tightening of policy in the States, then this would facilitate the gradual move lower here in cable in the longer run. Okay, just to quickly go back to Spain, there's a couple of things I quickly wanted to discuss, because importantly now is where do we go from here in the shorter term, so what happens next. And the FT wrote an excellent article and a couple of bits I just want to highlight to you. So Madrid could feel it's within its rights now to turn up the heat on the Catalan government. They could trigger what's known as Article 155 of the Spanish Constitution, which is to suspend the region's autonomy and call for new elections. It could go as far, basically, if they do this, it could mean more fines on senior officials, arrests. They could even go as far as taking over the Catalan police. This is what leads to this quite violent confrontation, of which we saw back on the 1st of October when they held that first, as far as Madrid is concerned, illegal referendum vote. So this would be more of an extreme step and does obviously carry a lot of political risks also on the international scene, given the type of footage that we were seeing just a few weeks ago. What are the immediate chances of dialogue with Madrid? Well, just having a look a little bit about Spain's history, the Spanish 1978 constitution says the country is indivisible, and the courts have ruled that the vote and any attempts at independence are illegal. What the line has been from the government basically then is that given that constitutional fact and the way in which the law is made in Spain, the government says it cannot negotiate because it's an illegal act. There is nothing to negotiate. So this is where you get this loggerheads, where we're at the moment. Now, what are the chances of international mediation? Well, I would say little. When you think about it, Angela Merkel's got her hands full at the moment trying to form her own political harmony, if you like, in Germany. As I say, there's things ongoing in Austria, Italy, Britain, there's the Brexit debate, so there's a lot going on. And what is there really to gain from these other countries getting involved? Probably not a lot when it comes to a regional part of a specific country. In terms of Europe's stance as a whole, they have so far sided with Madrid in this dispute, saying that the rule of law needs to be upheld. If you were going to sit on the textbook kind of reply, that's pretty much it. This is what Spanish constitutional law says. When this law was first made, if I think I'm correct, in 1978, it had something like 90% backing from the Catalonian region, and so you live and die by the sword. But obviously, we've gone through a financial crisis which has hit Spain particularly hard, and the Catalonian people, may feel, quite rightly so, I guess, given that they're one of the biggest contributing regions of Spain to the overall economic output of the country, that they've suffered. And so therefore, hence this kind of push for independence. Not only that, obviously language, culturally, there are obviously nuances between the two. So still got a little bit to play for with the Spanish situation. I would say today, certainly, there could be developments, i.e., as of now, we are awaiting commentary from Spanish PM Rajoy. And the big question here is, how does he respond? I would say my base case scenario is that he keeps a measured response, i.e., Catalan have said, okay, we're not going to pursue it right now, let's talk first. And I would expect Rajoy to welcome that and for them to go into some sort of dialogue for the time being. The most abrupt situation, and one which might cause some initial risk-off reaction, would be if Article 155 is immediately invoked by the government, because this would cause confrontation. So that's how I kind of be playing it today in regards to that story. Okay, quickly then, just to round off a couple of other news articles just to be aware of. This is one from Fed's Catalan. Now, just before I go on to what Catalan said, always important to know your FOMC hawk-dove scale. So here it is. So for 2017, Catalan, the representative of the Regional Bank of Dallas, is a 2017 voter. Catalan pretty much sits in the middle, if you like, so is relatively neutral on an average basis. Kashkari, as we know, the uber dove of the voters, Harker, the most hawkish of all, Mester and George, who are non-voting members. Okay, so Catalan's pretty neutral. So this is what he said. Wants to see more signs of upward inflation before raising interest rates again, but that low long-term borrowing costs may limit how far and fast rates can be raised. So if anything, Justina, as you were saying in the new room, so you're exactly right. This obviously is sitting slightly more on the dovish side of the spectrum. And so it's quite interesting. I mean, if we're having a quick look at the Fed watch to look at the CME and the Fed funds futures to see what the probability is of an interest rate hike in December, irrespective of what Catalan has said, we are still priced at 86.7%. Now, if you remember the other hikes that have taken place from the Fed so far this year, Janet Yellen and her Federal Reserve Board have done an excellent job of communicating to the point of moving the interest rate expectation to pretty much 100%. So when they deliver that blow of a rate hike, it's completely factored in, and the market sees a fairly contained reaction. It's really the outlook that comes along with that, which obviously we're going to get an update to the summary of economic projections in December, which is almost more important. So interesting though, Catalan obviously speaking slightly softer, i.e. dovish, than maybe you would expect, but it hasn't really altered what the market is expecting at this point of view. He's probably not seen as one of the more influential members, certainly not a vice chair, like Fisher outgoing, or Dudley, or even Janet Yellen herself, obviously the chair. This is important though, Fed commentary for today. I did send this out to you earlier. This is a research report from our friends at ING Markets. And they are just talking about what to expect from the Fed minutes. And as you know, with the Federal Reserve and the monetary policy there, the big deal here is about inflation. Is it a temporary dip or something more concerning? And really this is what's going to determine the balance. That so far the Fed have basically said that lower inflation, if you like, or core inflation, is a reflection of idiosyncratic or temporary factors. And so as such, then once they are removed, the tightening of the labour force should then warrant the fact that demand will increase, wages will pick up, and inflation associated with that will start to rise again, is the thinking. The type of debate around this subject, though, will be what probably the market will react to later on this evening. Just to let you know, I'll be here up through till 7 p.m. to deliver that live with you guys, and hopefully to provide some real-time analysis, and we'll stay online for about half an hour after that. So you're welcome to trade that event. Okay, quick look at the calendar. This morning is particularly quiet, so again, just mindful of updates coming out of the Spanish government. Otherwise, no real data of significance until we get into really later this afternoon. And there's JOLTS job openings. This used to be one of the favoured measures from the Fed, but really not so much these days. Again, it's really the inflationary readings which are key for the Fed. And then you've got the API crude oil inventories. You'll notice that these are a day later than would be normal. This owing to the fact of the Columbus Day holiday in the States on Monday. And so you'll have the APIs tonight, and you'll get the Department of Energy's release of inventories on Thursday afternoon at the slightly later time of 4 p.m. London instead of 3:30. Speakers, a few to be aware of, in particular Feds Evans, because speaking during our session and is on topic. A voter speaking on the economy and monetary policy, so certainly that could be quite interesting to watch. And then later on this evening, some other speakers, but this is well into the latter part of the US session. Okay, that's your brief. So anything else I can do, any questions, please just let me know. Happy to help in the chat room. Otherwise, have a good day. And the research report for the FOMC, as I said, from ING is in your inbox. We'll be discussing that in more detail much later on this afternoon. Thank you very much.